Hello friends, in this video we are going to do the stock analysis of one of your favorite stocks, Laurus Labs. Before we begin, if you have not subscribed to my channel, please do subscribe right now and do consider joining the community as we are discussing lot of stock specific and market specific analysis during the market hours, and do consider following me on Telegram also. So let's begin. Laurus Labs is a research-driven pharmaceutical company. Why are we emphasizing on research? Because the company's focus is right from the beginning, right from the incorporation, is on research. So they spend a lot of money on research and they are very actively researching and creating new products, and there are continuously new product launches lined up in their pipeline. It started as a one product company and now it has become one of India's largest API manufacturers. It is also tapping the opportunities in the formulation segment recently, and it is trying to grow its formulation business and not restricting itself to just APIs. It is also focusing on their CRAMS business and participating globally. It has 6 manufacturing facilities in India, in Visakhapatnam, and 1 research lab in Hyderabad. It has more than 3872 employees, out of which more than 60 are PhD holders, so they are giving a lot of importance to top research talent. The APIs are sold in more than 56 countries and they are having leadership in APIs categories of antiretrovirals, hepatitis C and oncology. Now let's understand in simple language what are APIs, intermediates and formulations, because when we are discussing during this video you will get confused by the usage of these words. So APIs are active pharma ingredients which are used to make the actual drug which we consume whenever we have any sickness. So the main component of that drug, or the main component which gives effect to that drug, is an API, and intermediates are unfinished forms of API. So the 3 stages are intermediates, then it comes into the form of API, and then it becomes a formulation or a ready to use drug. For an example, if we see, crocin is a formulation or a drug, and paracetamol is an API which is used in crocin, and PMN ophenol is a intermediate which is used in the making of paracetamol. So by this I'm sure you will easily understand the discussion in the upcoming slides. So let's talk about the promoters of this company. The CEO and the founder of this company is Mr. Satyanarayan Shava, who is a master's and PhD in science. He's a postgraduate from the senior executives course from ISB, and he has more than 3 decades of experience in this industry, and he has more than 100 patents registered in his own name. So that shows that he is being interested in research right from the beginning, and he has a lot of patents to his name. Let's understand the group structure of this company. Laurus Labs India has 4 subsidiaries. All the subsidiaries which we are discussing are 100% owned subsidiaries. Laurus Labs India has 4 subsidiaries: Sriam Labs India, Laurus Generics SA Pty Limited, this is a recent acquisition from Aspen, South Africa, Laurus Holdings Limited UK, and Laurus Synthesis India. Now Laurus Holdings UK has 2 more subsidiaries which are Laurus Generics Inc. USA and Laurus Generics Germany. So this is the group structure. Let's understand a brief history of this company. This company was incorporated in 2005 in Hyderabad as a private limited company, and later it was converted in 2007 into a public limited company, and the name was changed to Aptitude Laurus Limited with a strategic partnership with Aptitude Singapore in 2007. But later it got converted again into a private limited company in 2007 because there was a dilution in Aptitude's stake, and it got converted back to a public limited company again in 2012 to 16. So all these happened as a history, but now let's discuss the milestones which are critical to the growth of this company. In 2006 it set up its R&D center in Hyderabad. In 2007 it started the commercial production of its first unit. In 2013 it crossed 10 billion INR revenues. In 2014 there was an investment by Warbus Pincus of 3000 million INR, and in the same year it incorporated its first subsidiary in US, and it partnered with Aspen, which is a global pharma company, for its CRAMS business. So on behalf of Aspen, they have started doing their outsourced manufacturing. In 2015, it started its commercial operations in Unit 3 in partnership with NAT, and also entered a partnership with NATCO. In 2016, it acquired a subsidiary called Sriam Labs in India, and in 2016 itself, it was listed on NSE and BSE through its IPO. 2017, it started commercial operations at Unit 2 and incorporated subsidiaries in US and UK. 2018, it started commercial operations in Unit 4 and incorporated subsidiaries in Germany, and it also started its FDF, the finished drugs supply business. In 2019-20, in the recent years, it incorporated a new company called Laurus Synthesis to focus on its CRAMS business, and it acquired assets of a API unit in Vizag. It acquired Aspens, for which we discussed it's doing a CRAMS outsourcing business. That company's South African subsidiary Laurus Labs has acquired, which is Laurus Generics SA Pty Limited, and it also entered into a strategic partnership with Global Fund for 3.5 years, and Laurus Synthesis Inc. US was merged with Laurus Generics Inc. US. So these two are subsidiaries of Laurus Labs which got merged. So this is the milestone or the journey of this company. Now let's understand the business model. This company is trying to identify and invest in R&D and manufacturing. Their primary goal is this, and they are trying to develop an integrated strategy or an approach. So right from research till the making of bulk drug, they are trying to do a bulk integrated approach right from beginning till the end in-house. So the integrated strategy would be to do intermediates, API, formulations, and also the CRAMS business. Their focus is on quality and global compliances, and they are supplying across different geographies, and due to their integrated business, there are a lot of synergies or economies of scale or advantages which they get because they are doing the entire process in their own company. They are research driven, and their key customers are Aspen Pharma Care, Aurobindo Pharma, Cipla, Mylan Laboratories, Natco Pharma, Strides Pharma. So these are all their key customers. Let's understand some business highlights. They have filed 264 patents till now, and they have already got granted 130 patents. The products commercialized are more than 60 since the inception of this company, and they are serving more than 200 customers, which shows that they have a wide diversified customer base. There are 26 ANDAs filed and 61 DMFs filed, and their R&D spent was more than 160 crores just in financial year 2020, and in the current year, which is FY21 first half from April to September, they have spent more than 85 crores. So by this you can understand their seriousness and their aggressiveness in research and in developing new products. What are the business segments of this company? Broadly, they are dividing their business into three segments: generic APIs, generic FDFs, finished dosage forms, in simple language the actual drugs which we take, and the synthesis ingredients. In the third division, they do synthesis ingredients business, they do CRAMS business, and also their intermediates business. In generic APIs, they are leaders in antiretrovirals, oncology, cardiovascular, and antibiotics and anti-asthma drugs. Now let's talk about generic APIs. They are working with the top 10 global generic pharma companies, and they are growing their antiretroviral market size. New products are added in oncology, and they are finding growing opportunities in other APIs other than their core APIs due to their diversified nature of business. And talking about their FDF business, they are using their API synergies because they have in-house API manufacturing. It is easy for them to do their own formulations, and presently they have a capacity of 5 billion units, and they plan to double their capacity and increase it to 10 billion units by FY22. So you can see that they are very interested in growing their business of FDFs also. Coming to the synthesis and ingredients business, they are supplying intermediates to new chemical entities, and they have completed several projects from preclinical to the commercial scale. They are working with large companies in their intermediates and CRAMS business, and they are also entering into nutraceuticals and cosmeceutical sectors, which are food related and cosmetics related. And they have recently incorporated a company, Laurus Synthesis Private Limited, to focus on their CRAMS business. Let's understand the segmental revenue. Out of the total revenue, 50% comes from their API business right now, and about 40% from their FDF business, and 10% from the third division, which is synthesis and ingredients business. Earlier, majority of the revenue used to come from APIs, and now the other segments are also taking the major share. That we will understand from this slide. If you see in financial year 2016, the antiviral API contributed to almost 82% of the revenue, which came down to only 34% in FY21. And if you see the generic FDF business, it was only 3% in financial year 2016, which has increased to 38% in financial year 21. Custom synthesis business from 7% has gone up to 10%, and their other API also has gone up from 3% to 11%. So you can see that they are diversifying into the other segments of their business, and they are giving more importance to their formulations business. Let's understand the market and the industry in which this company operates. There is a continuous increase in the size of the market because the life expectancy of people is increasing, and people are alive even after 60s and 70s, which is increasing the market size. The regulatory environment is also evolving, and there are more and more regulations coming in for the safety of people. The importance of analytics and research is growing in this industry, and there are a lot of collaborations happening in the industry. People's focus or the company's focus is on providing affordable medicines, and the global spending, if you see on the medicines for the next 5 years, is expected to grow only for about 2 to 5%. So this growth as such is not really great in terms of the global industry is concerned. The developed markets can grow a little faster with a CAGR of about 3.3%, and the developed markets or the developed countries contribute to almost 60 to 65% of the global consumption. And in terms of production, Asia is the largest market for APIs. 66% of the APIs market growth will be from Asia. In Asia, Japan, China and India are the major players, and the API market size is expected to grow by $60 billion during 2020 to 24. So the API business is going to grow well, and the global generics market will grow by $180 million during 2018 to 22, with again Asia as the leader. Coming to the CRAMS business, it has about 40 to 50% cost advantage in India when compared to other countries, because in India labor and other factors are cheaper when compared to other countries. Nutraceutical industry in which this company has entered and is trying to expand will grow at a CAGR of about 8.3%. So that is a good sector to venture into. And coming to the Indian pharma industry, it is expected to grow at about 10 to 13% in financial year 2021. So in terms compared to global industry ranking or global industrial growth, Indian industry is able to grow a little faster, which is good for Indian pharma companies. Who are the major competitors of this company? Divi's Laboratories, Solara Active, Hikal, Sun Pharma, Dr. Reddy's, Cipla and many other companies. What could be the competitive advantage which this company has compared to the other names which we have discussed? Their research first approach is the major advantage, as their focus is a lot on the research. They have modern regulatory compliant plants and machineries and their manufacturing facilities. They have long-standing relationships with their existing clients. They have very efficient manufacturing facilities, and they have cost leadership in some of their products which they manufacture. The promoters are experienced and the management is strong, and their compliance is very robust, and they are able to comply with all the regulations such as US FDA and others. What could be the different growth opportunities or prospects of this company in the coming future? They are trying to strengthen their margins in the products in which they have already leadership, and they are focusing on their formulations business, as we have discussed, majorly in North America, Europe and low middle income countries. They aim to become a leading player providing integrated solutions right from research till the formulation product, and they are trying to keep or maintain a sustainable pipeline of new products which will be continuously launching now and in future, and that is why they are continuously investing in R&D every year. They want to leverage their API cost advantage for forward integration into FDF. So they get this advantage where the API is also in-house manufactured and the formulations also. And they are trying to strengthen their position into their nutraceutical and cosmeceutical sectors. Backward integration is also being done for APIs, and they are trying to manufacture the raw materials of APIs and intermediates also in-house, and there are opportunities for arising due to the global disruptions due to corona and other factors happening, which is giving boost to this company. What could be the different risks which this company might face? If the entire industry is in a downturn, there could be a trouble, and the competition risk when compared to the other different bigger pharma companies in India could be a risk. There are a lot of regulations which they have to comply with. They have to continuously innovate to stay ahead in the industry. They have to maintain their customer relationships as well as vendor relationships, and they have to plan their capacities and keep them optimized so that their cost continuously remains low. Since they are into international business, they have forex risk and also environmental and health safety risks. Coming to the financial part, after understanding the complete business model and industry and other factors of this company, let's discuss the quarterly result. The revenue in second quarter of FY21 is 1138 crores, which is up by 60%. EBITDA is 378 crores compared to 139 crores in the previous year. Profit is about 242 crores, which compared to 56 crores in the previous year. EBITDA margins have increased to 33% compared to 20%. Profit after tax margin is 21% compared to 8%. And EPS has come to 4.5 rupees compared to 1.1. So quarter results, if you see year on year, there has been a wonderful performance by this company. Let's understand the sales CAGR is about 12% in the last 5 years. In financial year 16, it was about 1778 crores, and financial year 20, it was 2832 crores. The EBITDA is growing at a CAGR of about 12%. In financial year 2016, it was about 364 crores to financial year 20 was about 570 crores. There was a dip in financial year 2019 due to the lower margins because of their higher raw material cost and incremental fixed cost because they started a new formulations division. The net profit is growing at a CAGR of 18%. And due to their margins decrease in financial year 18-19, there has been a lower profit reported, but in financial year 20, it shot up to 255 crores. Net worth is continuously rising at a CAGR of 20%. The debt equity ratio is falling, and presently in FY20 is about 0.60 crores, which is further gone down in H1 of financial year 2021, as we'll discuss further. The shareholding pattern of this company: promoters holding is about 32%, which is less. Mutual funds hold about 3.3%. QIBs hold about 3.2%. FPIs hold about 20.7%, which is a good sign, and other non-institutional and retail investors hold about 40%. Coming to the financial highlights, EPS is 24 this year, which is up by 166% year on year. The equity capital is maintained consistent. Debt is about 910 crores. And debt equity ratio is about 0.41, which is under control as this is a very high growth company. There are promoters holding which is pledged, which is about 16.42%, which is a kind of a concern, but the promoters pledge is becoming less continuously, which is a good sign. The reserves are fast growing. The tangible assets have increased to 1669 crores from 1586. So if you see, every year the assets of the company are growing, which is a good sign. Cash balance is about 2 crores, and since the company is continuously investing in growth, they are not keeping much of cash. The free cash flow is positive, which is about 74 crores in financial year 21. First 2 quarters I have taken this latest figure. Remuneration to whole-time directors is about 12.75 crores in financial year 2020. EBITDA margin is about 33% in the Q2 of FY21. I have taken again this latest figure. Net profit is about 21%. ROE is about 14.7% if we take the entire year of FY20. If we take the latest first half of FY21, it has gone up to 41.8%. ROCE is about 18.6 and the latest is about 37.5. So you see that the margins and the return ratios are drastically improving. Inventory turnover ratio is about 3.13. Interim dividend paid is about 0.80 rupees, which is 40% of face value of 2 rupees, and dividend yield is 0.18%. Coming to the valuations part, the last traded price is 282 rupees after the split. Financial year to the 52-week high and low is 59 to 344. 1 year returns are 322, so this stock has given a massive return to their recent investors. 5 years return is about 194%. Market cap is about 15,000 crores, so there is a lot of scope for growth in this company. The PE is about 25, industry PE is about 36, and EPS is about 11 rupees. Price book ratio is 8.34, which I feel is still a little on the higher side. And intrinsic value as per Benjamin Graham's formula comes to around 300 rupees. I feel the valuations of this company, in spite of giving such a big rally, are still reasonable. Yes, reasonable, provided it maintains the growth which it is showing in the recent quarters in future also. The support levels, I found it around 252 rupees. So I feel if someone wants to get into this stock, can start investing at the current levels also in a staggered manner. Coming to the recent news and announcements, there is a healthy order book maintained as told by the company for the coming quarters in the FDF business, and it has acquired Aspen's South African subsidiary as we have discussed. All the recent greenfield expansions have turned cash positive in financial year 2020, and they are running near maximum capacity utilization. They plan to double their FDF capacity by financial year 22 as they're focusing a lot on their FDF business. So this is about Laurus Labs. I'm sure you will be able to take the right decision, and let me give you a summary of our discussion. The experienced promoters are experienced, and the company is a research-driven company. They are consistently showing good growth. They are launching new products, and they have been getting approvals of a lot of patents. They have market leadership position in a lot of their products. They are diversifying within their product segments and also entering into new segments. They are unlocking synergies within their product segments. The debts are going less, and the margins and returns are improving. The client base is strong, and the pledge could be a little concerned, but I'm sure in the next few quarters the pledge would be gone. The promoter holding is less, which I normally consider a minimum of 50%, and there could be competition from other bigger players in the industry. In terms of valuation, the stock is reasonable, and coming to the main question, can this become a multi-bagger from the current levels? If the company continues to perform the same way as it is performing in the recent couple of quarters, I am sure the stock is going to give very good returns. So that's all from my side. I hope you like the video. Do leave your views on this particular stock in the comments below. Let us discuss and share our views. So thank you for watching this video. Do subscribe to my channel and consider joining if you want to discuss with me 1:1 about stock specific and market specific views and analysis. Follow me on Telegram, and have a great day.